Perpetualness. Normally, the most difficult thing about a perpetual machine is finding out where to hide the batteries to make it look like it just keeps going. But we actually have something that is perpetual in the world. And guess what? You don't even have to hide a battery on this. I know. What crazy chicanery are we talking about today? Well, it's one of my favorite products, actually. It's called Perpetuals. Now, a lot of people, they don't have access to these because they're in the US, and oftentimes these are gated. You got to use a VPN, get on Bybit or Binance, crypto.com even. Everybody likes them. Everybody has them. They're fantastic. But what are they? Well, I'll tell you. See, some assets, there might not be a lot of market liquidity at a given time. You might not always be able to get a huge order through on something without affecting the price massively. So what happens is these secondary markets pop up, okay? Now these allow you to not actually have the asset and yet have something that is the price of the asset, and it has a cool little funding scheme behind it to make sure it stays at the price or really close to it, and it punishes and rewards people based on helping bring it closer to the price that it should be at. Now, let's say I've got an asset, all right? I've got, no, can't use dollars. Those are too common. I know. I've got the nicest flip-flop in the universe here, okay? You want a flip-flop like this. It's great, all right? But problem is, you can't go on your crypto.com account or your Coinbase account and buy my flip-flop. It's just too special. You can't have any liquidity in that market because I'm not selling. So you know what you can do? You can have a perpetual. That's right. Even though it's not on the market, we know what the fair value is probably of that thing, or close enough. And even if we don't, the market can help us decide what it is. So you can take the smallest amount of pricing information on this thing. Maybe you heard what I originally bought them for and you start out at that price. All right, cool. We're here now. And what happens is people can come in and say, hey, I think the price is going to go up. I'm taking the long position. So they buy the perpetual. They buy the long end of the perpetual. What this means is if the price goes up, they benefit. If the price goes down, well, it went down and you want it to go up. Not good for you, but that's what you did. Or you can be short. You can say, I think that shoe there, it's going to fall in value over time. It's a nice shoe, but eventually shoes wear out. So we're going to short it. So they buy the short end of the perpetual, or they short it. All right? Now, the perpetual is going to track roughly what the shoe's value is. But how is that if there's not a big market and we're constantly getting updates every minute? Well, it's simple. The funding rate. As long as we have a vague reference of what the rate should be, an oracle in this case, because we're not actually trading flip-flops, we're trading random cryptocurrencies. And, this doesn't have to just apply to random things you've never heard of. There's huge markets for Bitcoin, Ethereum, heck, even Shiba Inu and Dogecoin. This is one of the interesting cases you can actually employ these things into, all right? So, you don't have to have the token, but you can get a perpetual that gives you exposure to the underlying. And let's say Bitcoin is trading for $70,000. And everybody's like, I think Bitcoin is going up, okay? So they're buying the perpetual. They're buying so much of the perpetual, in fact, that it moves the price up to 71,000. So it's 1,000 above what the actual market is. Now, how does this work? What can we do to fix that? Well, it's simple. There's a clever funding mechanism. See, every 8 hours, there's a funding rate that's exchanged between the shorts and the longs. There's a very small dampener in the middle so that if it moves by an insignificant amount, that doesn't count. But anything past this very, very insignificant amount, well, now, if it's above, like in the case we said before, where it's 71,000, but it's really only 70 for real Bitcoin, the longs have to pay the shorts. And it's usually tallied up every single minute. So for every minute that it's over, the amount that it's over goes into a formula, and it calculates you owe the people that are short for this minute this amount. And it ticks up. And it does this every 8 hours, there's an exchange. Now, what happens if Bitcoin's still at 70,000, but the perpetual's actually trading at 69,000? It's below the price it should be. Well, now the longs are going to pay the shorts. What's going to happen over time is people are going to want to sell their positions as shorts because why do we want to pay for this? it's at a better price than it should be, take my money and go, because I'm going to have to pay it all back to them in this funding rate over time if I don't. So by the action of people selling when they're being charged a high funding rate, it brings the price back down to where it should be, keeping it really close to what the actual underlying asset is, even though there's none of it actually in this system. The cool thing about this funding rate, though, is it lets you have a general way to gain on the value of something without actually interacting with the value of it. So by using this, you can actually profit and protect yourself potentially on various different positions you might take out. Because typically how most assets work is, of course there's exceptions, the people who are going long, the people who think the price will go up, the Bitcoin maxes out there who are like, Bitcoin will be infinite dollars, they're going to have to pay a fee for that, because more people think that and they're putting more dollars behind it than the people that say, I think Bitcoin's going to crash. Put your money where your mouth is. Turns out a lot of people have a lot of faith in Bitcoin. So the people that are long have to pay the people that are short, because it tends to be pushed up. Now, this isn't any crazy rate. It's usually something in the 9% a year range. Oftentimes now a lot lower, thanks to Athena coming in and scooping up a lot of that yield for themselves. But that's still a nice little return. And this lets you do something called a cash and carry trade if you're a little bit more advanced user. Some of you guys are wondering, hey, these perpetuals, they sound really cool, because they are. I mean, they're fantastic. I use them all the time and I love them. But I've been talking about these primarily in the context of centralized exchanges. We mentioned Binance and all them. Yeah, they're good with these. That's a place that I regularly go, along with a few other places. But what about decentralized? Because you know I love everything decentralized. I love my decentralized money. I love not having to have intermediaries. So why are we doing this mostly centralized? Well, unfortunately, while there may be several different protocols out there that let you do perpetuals on chain, most of them have a little bit less liquidity, okay, a lot less liquidity than certain centralized exchanges. On top of that, you end up incurring much higher gas fees and stuff, because all this stuff being done on chain, it incurs a fee. Now, this might not be a big deal if you're throwing around hundreds of millions of dollars in every single transaction, but the problem is most of these on-chain perpetual protocols, they can't handle that kind of action. Heck, they freak out when you throw 200 or 300 grand at it, okay? So they really aren't meant for you to bring a significant amount of money to and, interact with. And if you're not bringing a significant amount of money to it, the gas fees are too high. So there's a bit of a chicken and an egg problem here. Hopefully one day somebody will have this all fixed up and people will be able to use it decentralized, because that would be fantastic. But for now, the centralized exchanges, as long as you go to a good, safe exchange, they offer this and they're really good. Now, there's usually a small fee for getting in and getting out of a position. So keep that in mind. Don't just assume, bam, put it in there, guaranteed was free and all. But oftentimes these fees are pretty low, and if you're doing it at big volumes, the fees get down to almost nothing. So it ends up being very worthwhile, especially if you're doing it in the 9 or 10 figure range. It ends up being insignificant fees, massive income, and honestly, it gives you a lot more flexibility. You now get to create positions where there might not be a market liquidity, and this is something that's very useful, especially since most of these are open 24/7. So now, if you ever wake up and are like, I need to hedge my position. Ooh, and the funding rate is positive. Positive meaning I'm getting paid. That's fantastic. I'm going to hedge my position and make money on it. Sign me up. Now, some of you may be going, hey, these rates, they can change like crazy, and they absolutely can. You can't expect that you can just come in here and buy something and we're good. It just isn't that easy, okay? Because if you have one side of a perpetual, you are exposed to the underlying price action of the asset you have it on. So if you have a Bitcoin perpetual and you're short it, and you go, oh yes, I'll collect that funding fee, you will be exposed to Bitcoin gaining in value and you losing money because you shorted the perpetual, okay? And some of the tears that Bitcoin goes on, it could easily wipe you out if you're not careful. Conversely, if you're long on Bitcoin and this goes down, if you used any leverage at all, you could be in a lot of trouble very quickly. That's the thing about these products. Oftentimes, they have a lot of leverage that you can take out on them. A lot of places offer over 100 times leverage, which you should not use. You will get liquidated, okay? But if you dial it down, you keep it in the, single digits, or honestly, you shouldn't. But if you're really, really looking to be a degenerate gambler, please cap it at 20 times. Don't do 20 times. This is me telling you not to, but if you feel the need for blowing your account up, don't do it with 100, because that'll happen as soon as you possibly can snap your fingers. But if you do it at 20, you'll at least have an hour before you blow up, hopefully. These things are really cool, but they're not accessible to a lot of people. Yes, you can use a VPN and get around it, and you can usually access most of these places as soon as you do that, especially if you lie about where you are. But should you do that? Well, the answer is no, because you actually have no protections hardly when you're doing these things. You need a qualified third party or someone to take on this on your behalf, okay? If you run into this and something happens, if Gary Gensler comes down from his house on high and says, I'm shutting down this exchange because I feel like it today, and he does crazy things like that, unfortunately, from time to time, you don't want your money getting locked up because Gary Gensler had a bad day and he wants to take it out on a random exchange. If you come in there and you don't have the actual credentials needed to be on there as a proper customer, you are in jeopardy. Please, this is the one time I'll actually be like, you really got to use someone else. But please, people, use a trusted party if you're doing this and you don't have access, or don't do it at all. There are ways to get exposure to some of these products without actually having to go and do it yourself. Through the Overlord Club and our deposit system, we actually have perpetuals that we do more stuff with than just having a perpetual. But long story short, you can benefit from perpetuals by just depositing in the Overlord Club. And several different coins are used to hedge perpetual positions as well. Also, you could go and get Athena, the USDE token. Now, its yield has went way down. It used to be up in the 30%, and now it's barely 4% a lot of days. But if you really want exposure to Bitcoin and Ethereum staking rewards, this is an option. Hopefully their yields will improve in the future, but they've gotten so big and they're somewhat limited in what they can do. I don't foresee that happening too terribly much in the future. If you think I'm wrong, though, go on Pendle and buy the yield token. Profit from it. And if you don't know what Pendle is, go see our Pendle video. You might be able to learn something really interesting. All right, so that's perpetuals. If you guys have any more questions, let me know.